Friends, in this video for I Thought Wealth, I am going to talk to you on the topic why you must worry about this market's polarity. Every bull market sees one side very strong, right? Those who have gained enormously from a bull market will believe very heavily in what worked in that bull market. It's very natural. In every bull market I have seen this. In the 1992 bull market, people believed in a person, which was Harshad Mehta. In the 2000 bull market, it was a combination. People believed in a person also, and they also believed in a team, right? In 2008 bull market also, people believed in a person again, or a group or a business group, and in a team, right? So the 2018 bull market was different, that people believed in a team, which was small and mid cap companies. But this bull market is about multiple teams, right? Because we had a peculiar situation where some parts of every economy were not functioning, whereas some other parts were fully functioning. And the stock market had a lot of money thanks to the money that got printed and distributed all over the world. Interest rates were also brought down. People were losing investment avenues. So the anxiety of everybody to invest the money they had to protect their returns pushed a vast majority of people at a very rapid pace into those parts of the world economy which were functioning uninterruptedly, and not only that, were also providing much needed growth when other parts of the economy were at a standstill. You know what will happen in such a situation. In every situation where people group very heavily in one space, the first thing that happens is the investments that are available get cornered by the first set of people. Then the followers step in and their followers come in, and then you have layers and layers of followers who come in. But those who come in later in every stage pay a premium for their late entry. What happens is that nobody who has entered early has the heart to sell, because they know the opportunities are not high and the demand is very high and people want to participate. This naturally leads to euphoria. When there is euphoria on one side, it is very difficult for people to look anywhere else except where everyone is looking. Now, this we have seen in this bull market of 2021-22 and in 2020-21. This is not unusual. It's perfectly expected and on predictable lines. But every investor need not do what others do. You need not be polarized with the complete market or the herd. You can always choose not to join that party because it is too late. By doing that, you avoid the risk of being the last fool standing, or the person to whom these stocks are sold at the highest valuation, because that's the most important thing an investor ought to avoid. But it's very difficult today because all this information, all the news, all the hype is coming to you from multiple directions, and nobody is willing to say anything against this hype, and that includes me, because I feel, why should you waste your energy? You go doing what you are convinced about and be at peace. There is no need for you to convince another person that what you are doing is the right thing. Only those who have succeeded and want others to follow them at very high valuations need to do that. But we are buying stocks at valuations which we are comfortable with. We might as well just buy and wait and not bother about what the market is doing. So what are we doing about the polarity? We are just letting it be. If contrarians want the polarity to just be and do not want to interfere with that, then the responsibility of protecting oneself from any market-wide changes, when this polarized opinion reverses, market-wide opinion will change, and the responsibility to protect oneself from that change in opinion rests with the individual investor. So it's no more a social responsibility, it's no more the responsibility of the more discerning or the cautious investor. It's nobody's job to caution anybody. It is the individual's job to caution himself. So in that sense, you need to bother about the polarity of this market, the way euphoria is getting built up, and the way money is rushing towards investment. Everybody who has been in the investment world long enough will agree on one thing, whether you want to bet on the polarity or on the contrarian other area, that money rushing usually does not lead to intelligent investing or efficient investing. Most of the times it has the capacity to take you too fast, too far from where the comebacks are difficult. So that is something which the retail investor, the guys who have come into the market in 2020 and 21 ought to find answers for in their own actions. They need to become cautious, they need to raise their levels of safety in their portfolios, and they need to take a more nuanced and measured approach towards newer investment ideas. If your investment is happening at the fastest pace in your experience right now, then you have reason to address that and try to slow things down. So this polarity is different from the past cycles because this polarity has no counterforce, there is no pushback. It's something that's like a tsunami which will just push everybody back in time. So this polarity must be acted against by the individuals by moving to safety before the tsunami hits us. Nobody knows when it will hit us, but it's certain it will happen. So the responsibility to save oneself rests with us. On that note, I request you to share this video with your friends who are recent entrants to the market or experienced players in the market, so that they can share their perspectives with you, which could help you improve your investing, also assess what I am telling you, and make you better investors than those of our generation. Thank you.